Correct. Yep, very much a marketplace. I mean, you can make an offer right online that gets sent straight to the seller. Seller responds directly back to the buyer.
And is it more about cash flow or appreciation? Talk to us a little bit about how you're choosing the properties that y'all are buying.
I've been pleasantly surprised with that market. The rents have been increasing, population's growing. The two things I knew about it before I started was that's where the College World Series is and that's where Warren Buffett lives, right? Because you could either put it up on our site and say, hey, I want to retain 25% of it in shares, right? And I'm going to sell 75% of the shares on our marketplace.
All right, everybody, welcome back to another episode of the Evernest Real Estate Investor Podcast. I am one of your hosts, Spencer Sutton, and of course, I have my co-host, Adam Hobson. Adam, welcome back to the show.
Yes, sir. Good to be here again.
All right, here we are again, and this time we have got a guest with us. We have Nick Roman with Real Bricks, and Nick, welcome to the show, man.
Thank you. Thanks for having me. Happy to be here.
Yeah, we're glad you're here. And why don't we kick off? We were just talking about this before we hopped on. I'd love to hear kind of your experience in real estate, kind of how it started, and then what brought you to Real Bricks, and give us a little bit of history with Real Bricks.
Yeah, for sure. So, I've been in real estate for close to 10 years now. The majority of that time was spent at a company called Roofstock. And what we did back in the heyday was we would sell rental properties online. And kind of the gist was that you were buying a property that already had a renter in place. So seller gets to cash flow up until they close, and then the new owner gets to start cash flowing day one. That was primarily single family homes, mostly in the Southeast and Midwest. And that's how I initially connected with Evernest. Was they were one of our earlier property management partners. I only ever received good feedback from buyers who I worked with that they were happy they chose Evernest. That was great to hear. And then I was able to fly out to Birmingham for a bus tour where I met Matthew, who was kind of helping to sponsor the trip and talk about the local market, get people excited about the city. And then obviously since then, that was in, I think, 2017 or 2018. I mean, you guys have just had massive growth, which I've been, following. So kudos, great job. I mean, it seems like you're in almost every major city in the U.S. right now. So I was there for about 7 years. And then there was a bit of a shift in the way that they do business. They mostly work with institutional groups now. They're not as focused on the retail buyer.
Because that was the play back in those early days, just to kind of give everybody an idea of what Roofstock was back then. Because Adam and I have some friends that actually sold properties on Roofstock. Mm-hmm. So they're local investors here. They had a rental house, they had it rented, they rehabbed it, rented it, and then they would put it on the marketplace. And essentially Roofstock was finding people from around the world that wanted to invest in some of these markets, and they would, I guess, name the price. And so it was kind of like a marketplace for single family residential properties before this shift that you're talking about.
Correct. Yep. Very much a marketplace. I mean, you can make an offer right online that gets sent straight to the seller. Seller responds directly back to the buyer. So there was no need to, get an agent involved. We ended up doing a program where you could work with a local agent if you wanted a bit more assistance. And then, as far as, just my personal experience with real estate is each year I was there, starting in 2016, I kept telling myself, hey, next year is the year I'm going to save up for a down payment. I'm going to buy one of these Roofstock homes, right? Kept getting myself excited and, was all bought in. Never happened, right? Never had the down payment that I could get together and, getting a mortgage with where interest rates were. And so, I started at Real Bricks about a year ago now. And one of the very first things I did was I bought shares on our platform. So quick kind of backstory on Real Bricks is we do almost the same thing that Roofstock did for retail investors, except you're not buying the entire house. What you're doing is you're buying shares of the home. So it's fractionalized real estate. These are all securities that you're buying. So we registered with the SEC, put the properties through what's called a Regulation A offering. So you're essentially buying stocks in a company. It's just that you're buying stocks in a cash flowing rental home. So you don't have to get a down payment, don't have to get a mortgage or a credit check, don't have to get an agent. You're just placing the order right online. There's no bidding. Individual shares are $10. We've got people starting with $100, which is the minimum. We've got people dropping 25K, right? Because whether it's their first time or if they're a more experienced individual who maybe they have owned rentals in the past, they don't want that hands-on approach as much anymore, or they want to complement their portfolio in a way that it's a lot more passive. So it's been great. RealBricks is a great company to work for. Started in 2021. Took about 3 years to get the platform up and running and registration with the SEC, which is, as I'm sure you can imagine, a lot of paperwork and filings and auditing. And we became available for investors to start investing with us in July of last year.
And so let me ask you this: how are you determining market, property? Is there like, hey, here's our buy box, is exactly, we know exactly, or are you investing in just certain areas of the country that, hey, we want to be here? And is it more about cash flow or appreciation? Talk to us a little bit about how you're choosing the properties that y'all are buying.
Yeah, all those questions are what gets my juices flowing for our future, and us choosing markets and having properties that have higher cash flow, having properties that are newer built that might have more potential for appreciation in certain markets. If you visit our site right now, our inventory currently is in Omaha, Nebraska. And, I live in California. I'm in San Diego. When I started, I was like, oh man, Omaha, right? Like, who knows anything about Omaha? I know it's not a market you guys operate in. I've been pleasantly surprised with that market. The rents have been increasing, population's growing. The two things I knew about it before I started was that's where the College World Series is, and that's where Warren Buffett lives, right? Beyond that, not a whole lot. So that's where the homes are right now. Our founder, Chris Girardi, he lives just north of Omaha. So that was part of the reason why we started there. But also, it's just been a good market for us. The homes that we have are all relatively new construction. They've been performing very well. Tenants have been good. One of the tenants just extended their lease through 2029. But what's more exciting is, kind of what you were asking about future state for us would be new markets, right? So that's kind of where we are right now.
So it's almost like proof of concept is there in Omaha, and you're hey, this is our backyard from the founder's standpoint. We know what we're doing here. We're going to prove this model out. Drive I guess get some clients. And then maybe expand after that.
Correct. So that's actually what brought about, me reaching out to Matthew and you guys at Evernest is we are expanding. So we're going to be entering 3 new markets, Texas, North Carolina, and one other one, Nashville. So you guys operate in all 3 of those markets. Thought, hey, we're going to need a property manager. We're not going to be self-managing these. Who can we trust? So I said, hey, let's reach out to Evernest. And you guys have been awesome so far. So right now we're pretty much finalizing documents and looking at rental comps. Hunter's been really helpful with, getting comps on rentals in those areas. And yeah, we're very excited to be working with you guys. Everyone has been super great, including you, Spencer, to work with so far. And Matthew's great. And I personally believe in Evernest and what you guys have been doing. I think you're going about things the right way. So I'm very excited.
And do you have a specific buy box that you're looking at when you're thinking about like going to Nashville and North Carolina? Or is it really, hey, market specific? We're going to kind of let the local market determine what we're buying. Yeah,
so good question. Right now, the new inventory that we'll be adding is actually through a partnership with one of the nation's largest home builders. And they're all new construction. So that's kind of the model that we're going after first is new construction homes, not having to worry about, any sort of major repairs in the first several years. Most of the investors we work with, they're looking to do a traditional buy and hold, right? They want to hold on to their shares as long as they can, cash flow on them. And, we do have a secondary market that's ready to go. Once a property sells out, it'll move to our secondary market where you can then go and sell your shares as if you were on Robinhood, selling your stock in Apple. So we're essentially trying to build the Robinhood of real estate. So in the future, as we're continuing to expand, yeah, we're going to have an acquisition specialist who's looking at buy boxes, and we always try to take feedback from the investors. So that's what I do all day is I'm on the phone with people if they're more interested in cash flow or appreciation. Um, so certainly something that I'm looking forward to, and I'll be helping out with as well, because I'm very accustomed to buy boxes and spreadsheets, looking at different properties and bed bath count and yield and all that fun stuff.
Well, could I ask a question? You mind?
Yes.
So, along that same topic, I know right now you're focusing on new construction. I'm interested as somebody who rehabs houses, and if we've got mutual friends that have sold to like a roof stock and a turnkey property. Are you buying? Is there an opportunity for investors right now who are rehabbing houses to sell to Real Bricks, or are you strictly just new construction, build to rent type right now?
Yeah, great question as well. So that's another thing that I'm very excited for, right? Because let's take a look at that. If someone has a property that they're rehabbing, or maybe they've held onto it as a long-term rental for a while, and they're looking to sell, but maybe they don't want to list it on the open market, Real Bricks could be a really, really interesting way to sell your home, because you could either put it up on our site and say, hey, I want to retain 25% of it in shares, right? And I'm going to sell 75% of the shares on our marketplace. We go and put it on our site. People can go and buy shares. So the seller, right, they have Evernest managing the home, and they retain ownership in it at whatever level they want. Obviously, there's SEC guidelines on certain things of how much you can own and things like that, but that would of course be sorted out with them. We're watched like a hawk by the SEC. They're very strict on compliance. But that's one model I see happening is working with sellers who they want to retain some cash flow. They don't necessarily want to sell the whole thing, or maybe they do want to sell the whole thing and they put it up on Real Bricks. Another kind of interesting model I've thought of is, again, this is all just in my head. This is not like, oh, these are our business plans. Would be, okay, I'm maybe interested in selling, but I want to see if I can hit this amount in sales, right? So like I'm going to list it on Real Bricks for 200K. I'm okay if we raise in the next 3 months up to 180 in share value, right? Then I'll sell it, and all that ownership will go to every investor, right? Whatever amount of percentage equity they've bought into the home at, and they're okay with 180 or higher, right? Maybe we raise 200K in shares. That makes them happy. So that's another kind of interesting model that I think is very doable for us in the future, is working with retail sellers, as well as institutions who are looking to sell, or higher end investors who maybe own, 10 doors plus, right? Maybe they want to sell 3 of them. And I know you guys have a great network of owners who are constantly looking to, do 1031s and sell out of this market and get into that market. So yeah, hopefully that kind of helped answer your question. But a lot of the answers to these questions are going to be, those are great ideas. Let's focus on what's right in front of us right now, which is selling out these Omaha homes and then selling out these new construction homes, and then go from there. We don't want to overwhelm our investors right now with too many offerings and funds and things like that. Again, all things that we're going to be looking at in the future.
So I'm real curious, like, what is the ideal customer for Real Bricks? What is this person, the person who comes and buys shares, they're buying them at $10 a share, and you're saying they could, invest as little as $100 up to, you have people putting in $25,000. What does the ideal client or customer look like for you? What's their end game with buying shares of these properties?
Yeah, so that's a great question. We're really trying to help people take more charge of the financial futures. So whether that's someone who tells me on the phone, hey, Nick, I really want to get started in real estate. I've been thinking about this for a while. I've never been able to buy a house before. I'm going to have to wait until next Friday to get my paycheck. And then when I get my paycheck, I'm going to put $100 in. Great. We'd love that, right? We're helping them take the very first step in their financial journey. They would have never been able to buy a house on their own, right? I mean, with getting together a $90,000 down payment, getting a credit check, a mortgage, an agent, not to mention once you close on the property, dealing with, the tenants and leases and all that stuff you have to deal with, right? It's not very passive to own a rental.
It's not passive. It's actually a business. Once you buy one rental house, it is a business.
Yeah, so we love working with those people, that we're helping them take that first step. And what's great is that it's all self-paced. So that person who puts 100 in, if they put 100 in and they never came back and invested more, it's going to take a while for that to grow, right? I mean, $100 is about a 0.02% ownership stake in the home. So what most people are doing is they're coming back each week or each time they get a paycheck or each month, and they're putting in another 100. Um, and that is so valuable to be able to help someone build a portfolio of real estate, because, again, otherwise they would not be able to own real estate. A lot of the people we work with, they don't even own their primary home. Um, Now, what's great is that we work with all different types of buyers. So average account value right now is around $600, I believe. And we are getting more people who have a bit more experience. They've maybe owned a few rentals in the past, and they're either selling those, they're moving into retirement, they want something more passive, but they love real estate. So they find Real Bricks and they put 25K in because they see the value and the cash flow and the appreciation, but they want a fully hands-off approach, which this really is. You're not having to do anything in between dividends. We pay out every 3 months. Just goes right back into your RealBricks app where you can transfer it to your bank or let it sit there, continue to grow and reinvest. We're working on an automated reinvesting schedule where you can just opt in and then it just reinvests your dividends automatically, which is another very powerful tool to unlock. And then you're just taking advantage of compound interest, right? If you buy a single family home outright, it's going to take a while for the cash flow to equal the amount for another down payment to go and buy another home. But with this, it's a lot quicker, right? Since the minimum is just $100.
So what's your average return? Let's say that person that either they put in $100 or they put in 25,000, and I guess it's a two-part question. So are they putting in money into one specific property, 123 Main Street, or is this a a portfolio of properties? Because I know you mentioned, well, they may put in $100, this month, and then they want to come back and reinvest. Do the shares close after so many, people have put money into one property? Do you roll it into another one? Kind of how does that work, and kind of what's the average return they could expect?
Yeah, so the minimum is $100, which is 0.02% ownership stake. The maximum that any individual can invest on one property is just under 10% ownership stake. That comes out to be about 3,600 shares or $36,000. Once you can invest all the way up to that amount. Once all the shares have been sold, because there's a finite amount of shares.
Per property, right? Your finite
Correct.
amount of shares per property, right?
Yep. Once a property has been fully funded, meaning all the shares have sold out through Roofstock, the property will then be closed, right? We're not taking on any more investments, and it will move to our secondary market where you can then go and, if you'd like, sell your shares. The idea, of course, will be that as you're holding your shares, they're going up in value, just as if you were to go out today and buy a house for $250K in Birmingham, held onto it for 10 years, and then sell it for $350K in 10 years. The same thing applies here. You'll visit the marketplace. Hey, it looks like the shares have been recently trading at $14 a share. I'm going to sell off some of my shares. So that's where the SEC comes in, because you're trading securities, right? So, with the cash flow, that's usually just the cherry on top. What's really going to make you money is the appreciation. Certainly the cash flow is nice, and that's why a lot of people are doing this. And then to the second part of your question, Adam, remind me what the second part was. You can come back and you can invest. I think I answered both, actually. You can invest in the same property again, or you can diversify and buy into another property. Again, as we're entering new markets, we're going to get a lot of people who want to get out of Omaha, keep their shares there and then diversify out of state.
Yeah, average return, I think, was the second question. So
that's right.
Is 3%,
Yep.
5%, kind of what's the average return on investment there?
Yeah, so our investors have been really happy, and we've been hitting close to an 8% return. With these new construction homes, they're probably going to be closer to a 5 to 6% return. That's going to be a big part of my job, is explaining appreciation to these people on the phone, right? Because we feel very strongly about the appreciation in these markets that we're going into. So let's just say you put $100 in, and for 1 year you didn't add anything else in, right? 8% of $100 is only $8. So each quarter, that would be a $2 dividend payment that you'd receive in your account. So sometimes I'll get people giving me pushback. It's like, well, yeah, you put $100 in, and 8% of $100 is $8. Let's take a look at what $1,000 is, right? That's $80, $20 a quarter. 10,000 would be $800 a quarter. That's $200 a quarter, so on and so forth. So it's all on a scale, right? Some people drop, 5K, because at 5K at 8%, that's about $100 a quarter. And at that point, you can just begin reinvesting, right? Because that's the minimum investment.
Gotcha.
Talk a little bit about, so do you, and I guess y'all haven't been there, you haven't been offering this that long, since July of last year, right? So you had to go through all the SEC compliance, all of that to get registered. What do you, when you're talking to investors on the phone, what are you telling them the ideal time frame that they should be thinking about real estate investing? Because, for a real estate investor who's buying rental houses, rental properties, and I'm talking to them, obviously they can do whatever they want to, but I just encourage them, if you're going to buy something, hold on to it long term. If you have a good deal, if you have a good property, as long as you can, again, there's a lot that goes into it as far as keeping a resident happy, keeping them in there. Are you talking to investors about the time frames of what they should be thinking about and expect?
Very much so. And that's part of where the education comes in, and why I was brought on was to talk with people about their goals and what their aspirations are, and why they're doing this. If you put $100 in and you get $2 back in the next dividend payment, you're not going to be withdrawing the $2 and saying you won, right? So I'm a big buy and hold guy, and that's what I try to instill on the phone, is buy these shares, hold on to them for as long as you can, cash flow on them, and then sell them on the secondary market when you're ready. I mentioned earlier, I purchased shares in all 4 of the homes we have available right now. I'm just going to hold on to them for as long as I can, right? I'm getting a dividend every quarter. Don't need the cash right now. And it's something where I'm just going to let the homes continue to rise in value. I ended up being pretty bullish on Omaha after all I've learned about it. So yeah, I'm very much instilling a very long-term mindset in people's heads, because yeah, they're putting in a couple $100. It's not going to make a dent in their lives, right? But what will make a dent in their lives is consistently coming back and investing more, and seeing your dividends increase, and seeing your share ownership increase. So more ability to sell in the future.
Well, it's just like, to me, it's a lot like thinking about mutual funds, right? You're just thinking a mutual fund, hey, I'm going to, even if it's just $100, I'm going to put $100 in a mutual fund. If I just keep doing that over time, it's going to build into something. But from what I'm understanding, and correct me if I'm wrong, Nick, unlike mutual funds, the share price is at least going to be $10, right? So on the secondary market, because it's registered with the SEC, obviously there's potential downside if something shifts. People, like, share prices may dip below the $10. Is that correct?
Yeah. So usually what I talk to people about for risks would be, sure, the property value, may go down, right? No one knows exactly what's going to happen with the economy, with everything going on, if another recession happens. And, I was fairly young when 2007, 2008 happened, so it's not like I was in my professional career at that time. But to my knowledge, right, if you owned a rental property during that time and you had a tenant who was paying rent and covering your mortgage, as long as you didn't panic and sell, you were going to be just fine, right? You hold on to the home, cover the mortgage, and hold tight, and then home values rebounded. So I think pretty much every concept that we go through is the same concept of just normal real estate buying, right? So in that case, if you go and visit the secondary market, sure, maybe shares are not selling for over 10. Maybe people are panicking and need to cash out and selling at $9 a share. But again, if you hold on, the idea, of course, would be that in real estate, it just continues to go up, and you're still cash flowing. Right? If there's a tenant in place paying rent each month, then you're going to get a dividend every quarter. So same concept applies. hold and watch it go up and down, but generally up. Um, so yeah, same concept applies, and that's usually what I try to convey on the phone.
Yeah, that's a really good point because, if you think about it, in 2008, so I was in my professional career, Nick, in 2008, unfortunately. And unfortunately, my professional career was real estate. so I felt the brunt of that. And it really is like I knew people that had to sell everything that they had, because they were over leveraged. I knew people but I also knew people that held on. And during that really rough time of 2008, 2009, they were telling me, hey, if I didn't have these rentals, I would have been in a really bad spot. But I'm thinking one investor had 100 rentals, and it was like that's what kept him alive. And then the really savvy ones were out buying as things were going down. Yep. So even if you go to the secondary market, at Real Bricks, and you see something's trading below 10, that may be an opportunity as well to take advantage of somebody else's who's needs to sell for whatever reason. But you're right. I like that. I like the long-term mindset and just getting people to think, hey, this is you're not flipping a house. You're not trying. Right. You're not looking at it for 12 months. You ideally want this to last for many months.
So
correct. Yeah, absolutely. And the piece on leverage you mentioned. So Real Bricks actually purchased these homes all cash in Omaha. So there's no leverage on these homes. So there's no, financial, mortgage issues passed on to the investor as a shareholder. They're all paid for.
Which that helps with cash flow always.
Well,
absolutely.
Speaking of cash flow, I don't want to get to the ugly side here, but I think we kind of have to. We all know, run a property management company, if you own a rental property, you have, great cash flow for, let's say a year, and then inevitably, nobody's perfect. There's going to be that one tenant that all of your cash flow, you figure out that they have dogs, they've destroyed this, someone has destroyed the HVAC unit, the roof, even though you're dealing with new construction homes that shouldn't need anything for, in a perfect world, a long time. If you do get that tenant, and let's say I'm investing with you guys and putting in $1,000 a month, let's say that you have to go in and put $50,000 into this house to re-tenant this house. Do the investors skip a dividend that month? How does that work as far as reinvesting that money into, and this is all worst case scenario, obviously, but, new builds, you probably won't have that many issues, but it's always a possibility. So how would that affect the dividends, I guess?
Yeah, for sure. So we have a reserve fund, for repairs, and in the present state, we don't do any capital calls. So we're not coming to investors and saying, hey, the dishwasher and the refrigerator broke. We need $500 from each of you. Mm-hmm. So we're not doing that right now. We're not coming back to investors and asking for more funds if something breaks. That's something that we're handling. And then as far as dividends, let's say the tenants lost their job, they move out, they called you the day of and they're saying, we got to get out of here, we're leaving, and they stop paying rent. Yeah, I mean, the risk is there, right? It's the same risk if you owned the property outright. It's the same risk here. It's just that's a lot more spread out. Mm-hmm. So yeah, I mean, if let's say it took a month and a half, 2 months to find a new tenant, then that investor's dividend is going to be lower that quarter because we didn't receive as much rent. That's why it's always good to diversify. You have ownership in several homes and the others are picking up the slack. But yeah, I mean, that's definitely one of the main risks I talk about on the phone with people is everyone who's ever owned real estate deals with vacancy and problem tenants and things breaking. It's just part of the game, right? Mm-hmm. As you guys very well know. So yeah, I mean, the same risks are there. But again, it's just that it's more spread out. And since we do pay out quarterly, if let's say there's, a clean 1 month where there's no rent, you're still going to get a dividend because if the tenants move in the first of the next month, then that's 2 months of rent they're going to be paying. So you'd still get a dividend, might just be a little bit lower that quarter.
So have y'all thought about, and I know you have, but are you giving like a, let's just call it a shelf life to these properties? So you get these new build construction and you say, okay, well, I think if we keep this for 10 years, we could potentially not have to replace HVACs, roofs, that kind of thing. Are y'all giving it a certain amount of time when they're fully rehabbed or brand new to say, hey, we're going to go ahead and sell this off to maybe a smaller investor, and we're gonna take and buy something else that we don't have those maintenance issues on? Or kind of how is that life of that property, I guess? Or are you reinvesting money back into, if it needs a roof, we're going to put it on there. If it needs HVAC, that kind of thing.
Yeah, I think the answer to that is almost like we're going to cross that bridge when we get there. We don't have a set hold period for these homes.
Okay.
In the current state, ideally there are going to be some in our portfolio that we hold on to for as long as we can. We may sell homes in the future, right? And in that case, it's going to be because we spoke with an agent and we think that we could get it for a lot more than what we initially paid for. And if that happens, then any investor who's invested in it will receive their initial investment back. Plus, you get to share in some of the appreciation on the sale.
Mm-hmm.
So if you own 5% of the home and we sell for $50K over, then you're going to get, $2,500 if I just did my math right. I don't know if I just did the math right.
I think so.
So yeah, I mean, that's another exit strategy is if we do, offload a home, it's going to be beneficial to the investor. And, that's one other thing we've talked about and played around with as well. Do we need to have, like a shareholder meeting? Like if you own stocks in Apple or any company, you'll get the emails from Robinhood. I don't know if you guys are on Robinhood, where it's like, join the shareholder meeting right now to vote. So like right now we don't have that, but that's something that I could see happening in the future. Hey, do you want us to sell this home for $350K? Here's what your payout would be. Yes, no, right? So I think that's another really interesting way to look at this as well for an exit strategy. Because eventually we are going to be selling some of these homes because the market is saying that it's a great time, right? For example, just individually, property level, there is one home on the site right now that's called the Dalmore, where the tenants just extended their lease all the way through 2029, which was amazing. So we definitely plan on holding that one for at least as long as that lease runs through, right? That's the next 4 years. And the other homes are leased through the end of this year. We'll see if the tenants plan on staying or leaving. And then with these new homes, I don't know if you guys typically do 1-year leases or 2-year leases, but a lot of that's going to be, what kind of tenants we get. Are they planning on staying long term? Are they problem tenants? Hey, do we need to sell this home? All things that we'll be looking at.
Yeah, I was going to ask you if because you mentioned having somebody renew their lease through 2029. Is that one of your strategies but if you're using a local property manager, I'm just thinking Evernest, our leases are typically 12-month leases. With an auto renew, if we're going to reach out to them 90 days out and try to get them to renew, but if they don't respond, it automatically renews. So are you kind of leaning on the local property manager to decide the length of the lease, or are you pushing for, hey, we'd really like to see 24, 36-month leases?
I think we're going to put a lot of trust in your guys' hands to do that for us, right? We know that you're excellent operators, and I was telling Matthew, I actually did a Google search on Evernest the other day. You guys have like a 4.5% or 4.5 stars out of like a ton, which
like in Birmingham,
I remember
in Birmingham is like 3,100 reviews at 3.5 stars. 4.5 stars. I'm sorry, 4.5 stars.
4.5. Yeah. Which I remember when I would look up property management firms when we onboarded a new property manager at Roofstock, they're like 1s or 2s, right? Because people, it's tough for a property management company to get good reviews. It's just disgruntled tenants, right? But a 4.5, man, like I know you guys are doing something right. So I think we're going to put a lot of trust into you guys to vet the tenants and, make them happy so they want to stay and extend their lease. What I think is kind of interesting about people who are renting a single family home is most of the time they're trying to save up to buy their own house, right? I mean, in a lot of cases. So, they're just regular people trying to make the right financial decisions for themselves. And that's another reason I like single family homes is people tend to stay a bit longer, compared to like an apartment complex.
Correct. I think I find this really, really interesting and fascinating because I think this could be a great entry point to entryway into real estate without having all of the responsibility of it. Now, I just do. I just think, again, like I'm thinking about my son. My son's in Dallas. He's, just started his career. He hasn't bought a house in Dallas. He's renting right now. But if he decides that, hey, I'd like to start investing in real estate, this would be an absolutely fantastic way for him to start.
I love talking to young people. Yesterday, I talked with someone who turned 18 in June, and he's already getting started with us because he can't afford to go out and put 100K down on a 500K house in his area, right? I mean, he's getting started with $500, right? And he's just going to consistently, each time he gets a paycheck at the job he works at, he's going to come back and put another 500 in. So yeah, would love to talk to your son if he's interested in getting started.
I need to talk to him about it. Yeah, 100%.
Yeah. But it's 18, photo ID, and link your bank account, and then you're in. You choose the property, you type in the amount of shares you want, and you invest. It's really easy. It's almost too easy sometimes because it's all on an app as well. And it's funny because the young people I talk with, they're already done when I'm walking them through how to download the app and upload their stuff. It's like, oh yeah, like I just purchased the shares, and it's like,
So
great
quick.
job. And then I talk with an older person who it takes a little bit more work to get them through, but we love working with young people.
Yeah, they're way ahead of you when it comes to all the tech stuff.
Yep.
And they probably appreciate that. Well,
Yeah.
tell us what's the vision down the road, Nick? I know you've given us kind of a roadmap of, hey, we're moving into these new markets and it's going to be, build to rent. Look down the road a little bit further, maybe 5-10 years. Mm-hmm. What's the vision for where you all see yourselves?
Yeah, I think it's going to be almost similar to Evernest because, you guys started in, I think it was just Birmingham, right? Back 15 years ago.
2008, just in Birmingham. Yep.
So, growth trajectory, we want to be in as many states as we can be where it makes sense, right? And then we were kind of talking about it earlier, but if we get a model set up where we can work with sellers and they want to sell their homes through our platform, great, right? We put the home through a Regulation A offering with the SEC, and it's available up on the site for people to come and invest in that market, right? So that kind of almost happened with Roofstock, which is because we started gathering all these local agents in different markets, it's almost like you could buy anywhere you wanted to with us, because if you said, hey, Nick, I want to buy in Tuscaloosa, right? We say, oh, great. Our agent Bill is there. We can connect him with you. And, you can work with him through Roofstock. So, I think long-term vision for us, is everything at the core of what we do is helping people secure a more financial future for themselves. That's why I love working here, because, I'm not working with people who have $50 million in their bank account and they're looking to put $100 in, right? That just wouldn't make sense for them. I'm working with the everyday person who's just getting started in real estate, or someone like you guys were mentioning earlier, I think Adam or Spencer, where they've been doing real estate, but they want something more hands-off and more passive, right? Those are some of our higher end investors who own, between 5 to 10 doors. And they found us, and they're putting some capital in because they don't want to deal with the tenants anymore, or getting the phone calls from the property manager. So, I love that we can work with both ends of the spectrum, right? And again, I think the core of what we're trying to do and will continue to do is help people build a more financially secure future through real estate. And it's extremely possible because of the dollar amounts that you're investing, right? You're not shelling out your entire life savings or saving up for 10 years for a down payment, right? And we're going to continue to do that. Portfolio value is going to continue to increase as people come back and put $100 in a month or a week, right? People are just going to continue to grow this. It's a long-term investment. It's going to take time to, turn into something that's going to make a dent in your life. People I talk to are starting this for college accounts, right? Or saving up for an early retirement. So again, that's why I love working here, because it's really all different types of the spectrum of different types of investors. But for the third time now, it's all about, helping people secure a more financially future. And I don't see that aspect of our business going away.
Yeah, I love it. I think this is great. Nick, what is the best way, if people wanted to find out more about Real Bricks, what's the best way for them to do that? Is it to give you a call or just visit the website, fill out a form?
Yeah, so we have a website, realbricks.com. We also have an app that's available on both the iPhone, the App Store, or the Google Play Store if you have an Android. Really easy to use app. I'm on the phone all day. I'm very easy to reach. My direct office line, I can share my email, nickroman@realbricks.com. So it's easy to find us, and it's really easy to set up a call with me. But yeah, I mean, the other thing is that we've been on a few podcasts recently. One that we had a few weeks ago was with like a local agent in Omaha, David Matney, and his podcast. So if you wanted to do, off-market diligence, you can watch our videos, on YouTube. We have our own YouTube channel with our own self-created content. We've got testimonials on there from investors. We're really proud of our Google reviews. If you do a Google search on Real Bricks, take a look what people have said. So it's a long-winded answer to your question, but yeah, visit realbricks.com.
Yeah, that's great. No, you can do some research and then reach out to Nick and have a conversation. And Nick, I am actually going to talk to my son about this. So be looking for a call, maybe from my son, Grant. Hopefully he'll reach out to you.
Yeah, and that makes me actually think we do have a referral program as well, which is pretty cool. So once you invest, it doesn't matter the amount, you'll get a referral code. And when you share that with people and they invest, they'll get $50 in shares, and the referrer will as well. So both parties get $50 in shares, and you can do that for up to $10,000 worth of shares. So we've had people get really creative with it, right? They put it on their socials, tell their friends and family about it, colleagues, clients, whoever. And it's a nice, easy way to build up, some free shares, really.
Awesome. Well, that's great. Nick, thank you so much for being here, being on the podcast. Really enjoyed it. And again, everybody, if you are interested, want to find out more, visit realbricks.com. And we'll be back next week with another episode of the Evernest Real Estate Investor Podcast.